Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, March 26th, 5:34 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we continue to be in an uptrend since November 1st and 2nd of last year, which is when we had back-to-back O'Neill follow-through days in the indexes, which led to a very nice uptrend. You can see the 4 green arrows still over here reflecting bullish market leadership. And all 5 of the major indexes continue to trend above the 3 timeframes that we track in these videos. The short-term 21-day exponential moving average, medium-term 50-day moving average, long-term 200-day moving average. So what happened today? Futures were green overnight. We had a strong durable goods report come in at 8:30, and they pulled back a bit, but still a green open and looking like a decent day anyway. But continued tight sideways action for 6 hours from the open all the way up till 3:30 Eastern time. But that last half hour was not what you wanted to see if you were a bull. Late selling and close at the low of the day, and a lot of leading stocks closing near their lows of the day. As you know, as part of our discipline, we know that 3 out of 4 stocks will follow what's going on with the major indexes. So after 2 days up in a breakout, keyed by the Fed last week, we have now pulled back for 3 days, sideways to down. No major red flags, but nothing, not a whole lot of positives either. But when the market coils in a tight range like this, it's getting ready to make a move one way or the other. Right now, we've pulled back to the 8-day exponential moving average, still above the 21-day moving average on all of the indexes. The RG8 all above the 21. But this tight action won't last forever. Something will trigger a move one way or the other. One concern of mine is that it could be the PCE inflation report that comes out Friday morning while the market is closed. So we really won't have an opportunity to react to whatever is in that report. But we'll keep an eye for the next 2 days. 2 trading days left in the first quarter. Let's see what they bring. Big 7 down on average 0.71%. RG8 mixed, just down a bit, down 0.09%. S&P 500 opened up 0.2, sideways, late sell-off, ended up down 0.3. Equal weight S&P 500 down by 0.1%. NASDAQ 100 opened up 0.3%, closed down 0.3%. Equal weight down about half of that. Dow down less than 0.1%. Mid caps down 0.2. Same with Russell 2000 small caps. These were green most of the day before giving it up into the close. Global 60/40 stock and bond down slightly on the day. In-house GROTECTION. Our top 3 individual names were red on the day, and with red indexes, we're not going to be green on the day. Down 0.5%, giving back some recent gains, but again, no significant damage. But not a lot of progress either with recent buys. That's something that's standing out to us and has been a topic of conversation on our internal team meetings. Let's go to the charts. You can see the S&P 500 here. You see the inflection point last week after the Fed. Gap up on Friday. Now 3 days of a sell-off. Let's go to a 15-minute chart. And you can really see the Fed breakout here. The gap up on Friday with a weak close. Tight action. Sorry, this was Wednesday. This is a Thursday gap up. Tight action on Friday. Gap down and tight action, weak close on Monday. Gap up, tight action, very weak close today. Typically, bull markets open weak and close strong. We haven't seen any strength at all the last 3 sessions into the close. I did read an article about how a lot of pension funds, which have a mandate to have a certain percentage of stocks and bonds, have a lot of stocks to sell after the strong first quarter that could be factoring into it. Will go by the individual action of the leading stocks that we own and also the indexes to make our decisions, not any article. that we read, but we do factor in a lot of information into our process, but most of it is secondary to price and volume, which is very clearly primary. Here's the NASDAQ 100 down the past 2 days. Very similar action to the S&P sitting on its 8-day moving average. Dow Jones Industrial Average, 2 days up, 3 days back, just like the S&P 500 with the breakout now, right kind of near that 38,300 pivot level. Mid caps, still strongly above the 8-day moving average. You can see the 2 days up, breakout, pulling back for 3 days. Consistent action at least across the indexes from that standpoint. Not quite a breakout on small caps, and small caps actually not below where they were on Friday. They believe that's the one index that didn't make a lower low today relative to the prior 2 sessions. So those are the 5 major indexes. VIX, mild action today here, closed slightly positive. It's beneath that 15 level and beneath the moving averages. So that's where we want it as this moves contrary to the indexes. The dollar, weekday yesterday after some strength, started out weak today, but got stronger as the day went along. You can see here, this is while the markets were going sideways, and then it went sideways. Late sell-off in the market was also corresponded with late strength in the dollar. Not high of the day strength, but we did close near the high of the day there. And this is something we're concerned about and actively monitoring. A strong dollar is a big headwind for stocks. How did that impact gold and silver stocks? Gold up mildly. Gold stocks also up mildly. Silver down 1%, coming down into the 21-day moving average. Bitcoin took a break today. Here's BITO down 2.4% after a big up day yesterday. On to bonds. Bonds tight today. Across the board, prices mildly higher, meaning yields mildly down. Here's the broad bond index. TLT, the long bond index, up 1/3%. 0TYX is the 30-year yield dropped a bit, and the 10-year yield dropped a bit. Okay, that's the inter-asset correlation. Onto the tail of the tape. You can pause this. I hit the highlights. As I mentioned, that PCE inflation data coming out Friday while the market is closed is a cause for concern. Day count up to, and now 3-day consolidation. Still the 7th day above the 8-day moving average on the S&P 500. 54th day above the 21-day moving average, including 97 of the last 98. Tight range, weak close. Not a lot of standouts either to the upside or the downside in indexes. MSOS, that's the U.S. marijuana ETF, positive on the day, along with XLV, medical, IGV, software. Software not really that strong, but at least it closed positive. Semiconductors got weak as the day went along. Transport's weak, oil's weak for a change. In the portfolio, GPS, I've been talking about this for a while, did a small starter buy on it. It looks like a nice short stroke on the weekly chart, and we got a bit oversold on the 60-minute stochastic, which makes a low risk short-term entry there. So we took a small starter position in there. And ARM, which started great yesterday, gapped up today, had a nasty negative reversal. We'll look at this chart in a minute. We trimmed half of that. Mild uptick in our volatility adjusted beta. Bottom line on the day, green open, 6 hours tight, but late selling, closed at the lows of the day. Leaders underperformed and really not making any progress. When that happens, we just frankly don't put a lot of new money to work. We kept their exposure there, at least above a 1, which is kind of part of our process. As long as you're above the 21-day moving average, we want to have at least the risk of the overall market in the portfolio. And we've been adding, but haven't been seeing a lot of progress with the recent adds. And when that happens, really, it's been a buy weakness, not buy strength type of market. And we'll start off with ARM to put an exclamation point on this. You can see that nasty negative reversal. Here's a 5-minute chart on it. You can see yesterday's gap up. Didn't really make any progress, but it held the gap. Gap up today? No, not at all. After noon Eastern time, big sell-off, and then kind of an H pattern into the close. Did kind of find some support at the 21-day moving average, but closed slightly below it. Not good action here at ARM at all. And IPOs, especially one that only 10% of the float is being traded. 90% of the float is still owned by SoftBank. I don't know if this is them putting some stock into the market or not. Normally they have to, I believe they have to put a filing out if they want to do that. But this thing trades kind of choppy, a 12, almost 13% range today. That's why we keep our position size small on it. It's our position sizes are dictated by our stop and the volatility of whatever we're investing in. Gap GPS. Let's go to the weekly on this. You can see looking like a short stroke acceleration. I really like this earnings line that they've added to the weekly charts in Market Surge. And this is really the reason for the recent strength in this. Big breakout, big volume after the breakout. You can see it on the weekly as well as the daily. 3 days of lowest volume over the last 3 weeks have been these last 3 days, as it puts in this very tight consolidation in here, looking just like a very nice bull flag. You can see the ants indicator indicating I think it's 14 out of 17 up days, something like that, 12 out of 15 maybe. It indicates strength, obviously, which you can very clearly see on the chart. So starter position in there as the 60-minute stochastic hit oversold and hooked up. So that was the new ad. Underperformers on the day in the portfolio. Let's start with Uber. Nothing wrong with the chart, but kind of did what the indexes did. 3 days up here, now 3 days of a rest, very low volume, which is good. Pulling back into the 21-day moving average. That's our third largest position. Second largest position, let's go to the largest position first, NVIDIA. This, after 1, 2, 3, 4, 5, 6 up days, deserves a day of rest, and it got it. Still above the 8-day moving average, but down 2.6% on the day. And Weatherford, the oil stock, is it closes out our top 3. Negative reversal at this 120 level down here. Just a thing of beauty here is it's riding the 8-day moving average higher. Some other things that stood out today, FCX, which we own, pulling back to the 8-day moving average. And a couple of leaders with varying states of action here. Some positive, some negative. Here's NXT. Still a terrible industry group. Solars breaking below the 21-day moving average today, down 4%. Dell continues to show some strength since it bounced off the 21-day moving average. DraftKings continues to take advantage of the March Madness. People on their phones placing bets as it gapped up, held the gap, and made a higher high close. Square with a little bit of a bounce today, up 1.3%, 1.4%, although closing at the low of the day. NRGU, which we did some offensive selling on yesterday, pulled back after hitting this 600 level, still above the 8-day moving average, but a really strong move up here that accelerated recently lately. That's why we sold it into strength. CART, C-A-R-T. Breaking the 8-day moving average, changing character here. Look how this rode the 8-day up higher. Below average volume today, but down 4%. Minor change in character on this. Let's see if this, how this follows through tomorrow, as this was forming a very big cup base. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. And let's take a look at why you should pick Revere over traditional advisors. Just These are things that we really strongly believe in for success in investing. And it's not just stick your money in and think long term and get a pep talk and a Christmas desk calendar from your advisor. Direct access to us, active risk management, technical analysis telling us whether the markets are weak or strong. Focus on leading stocks when they're strong. Avoid lagging sectors. There's no reason to be diversified into something that's holding back your returns. Nightly market videos such as this one explaining everything that we do, including what the market's going is doing, and quantified downside risk, less than 4% right now to the downside before we would be taken out of the market. If you're interested in this, reach out to us. We'd love to talk to you. And with that, I'll wrap up the video for Tuesday, March 26th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.